I have people that are wanting to learn how to trade that have messaged me and or responded to me on some post or a video I've made, and they're asking me to explain it or giving them an example. You know, I get it. I understand. Everybody comes to social media and they start blabbing, saying they're going to be great and all this stuff, but then they're just telling you the same thing everybody else is telling you. Right off the bat, I'm showing you something that no one else is showing you. So that right there is what's piquing your curiosity. And then if you've seen my other videos and you see how it's working, you know I've got your attention, but you still think I'm full of it, which is cool. I mean, I was the same way myself. So what I'm going to do is I'm going to show you guys something today. I'm going to break down several different math equations. I'm going to tie together a nested sequence for you. Pay attention in this video. I'm going to show you something you have never seen before. I'm not just going to use this sequence that you're seeing here. I'm going to break it down in a lot better way for you. That way you can start to see what it is I'm talking about, right? All right, now that I got that fixed where you can see this better, I'm going to go through it. I'm going to show you how to count, right? If you have seen my other videos or my other posts, I posted a sequence of numbers and stuff, and the sequences for the ones are all tied to this, and then there's sequences for 2s and 3s and 4s and 5s, right? And so I've built this system up to represent that, okay? And so what you're going to need to pay attention to is this. This is a strategy that will run for 25 years. Okay, I'm going to be very clear on that. I'm going to say that again. It's going to run perfectly for the next 25 years. You can do this forever for the rest of your life. Start over in the next 25 years. At the next point that you start over, like 2026 is the start of this right now. At a point we can start this and trust this. It is a macro time frame, and we'll start a nested sequence from it, okay? So that's what we're going to do. And the nested sequence is going to be, you know, counting in 1s, 2s, 3s, 4s, and 5s, okay? And we're going to be using different numbers to do that with. So if you'll just, you know, hang with me a little bit in this video right here, I'm going to explain a lot to you, and we'll go ahead and get into it, and we'll start breaking it down, okay? So right now, this is a sequence built off the number 5, okay? From pink line to pink line, we have 125 4-hour bars. In my previous video, I transferred some information over from my main charts to this, and I mislabeled one because I'm running multiple sequences. I run a different bar next to another one. I know I ran the sequence off that, and then it threw it off, and somebody did catch that, and so I corrected it with the little community post with the ones it should be. And so anyway, this right here is, I went over all this stuff and made sure it's right, so it should all be good. So this right here is 125. Each one of these sections are 25. So it's all based off the number 5. Again, we have 25 bars, or 25 bars of 25. So that gives us a 125 4-hour bar section with inner levels of 25 bars. And then each bar is broken down by 5 sections of 5 bars. If you take the time to look at that, you'll see. And then so we're currently in our next sequence, and we're running like kind numbers, odds and evens in every single strategy. Why? Because it is a mathematical boundary, it is a mathematical understanding that we can keep ourselves grounded with, okay? So that's what we're trying to do here. So if you'll just stick with me a minute, I'm about to switch to another sequence, and I'm going to show you something that I haven't showed you before, and I'm going to tie it to this one. So this one runs off of sequences of 125. The next sequence is going to be off of 250. Why? I'll explain that. If this is a 125 bar, right, that means it starts with a 1, a single unit of 1 candle, and it counts to 125. The next one is a 250 bar sequence. It takes 2 of these. It has not completed yet. So this is like 4 a.m. of your day. If you come into the day and it has, you know, if say this is your day, if you come into your day and it's, you know, midday has passed and you've got the high-low, you know, open and high-low and close of that first what would be 12-hour bar. And then your next 12-hour bar can trigger your high of day trade. Okay? So we'll be discussing what it means for you to see a trade and how you can interpret an actual trade in this video. It's going to be a long one, so if you'll just stick with me, I'm going to explain it in the easiest manner that I can for you. That way I don't really lose you, because this is already going to be complicated enough for you guys to understand. If you just try to take a moment and understand, if you had an inventory system, if you worked at a place and you ever did inventory, you're just accounting for everything you have. Everything you have, okay? Now, we can say that it could be every shelf, or we can say everything in a particular box, and we could count that box in groups of what's inside of that box in groups of 1s, 2s, 3s, 4s, 5s, 6, 7s, 8s, 9s, 10s, right? You can understand how you could keep going with that. So what we're doing is accounting for a gross of everything, and we're going to do it in a fractal sequence, a nested sequence. What that means is you have multiple different mathematical sequences starting at the same, they have the same origin point, okay? So that is what it is that you need to understand. They all come from the same point, and so therefore they are tied together perfectly. They cannot be off. You cannot take one and randomly start it at another point and not understand how and why you can do that. You have to do it at specific points, which is why I'm trying to tell you this sequence to start at the open of 2026 on your 4-hour bar time frame, okay? So do not alter this. Do not change it. Do not grab this information and just slap it on something else and go, man, I'm doing great. I'm having a response. Listen, you're just, what's happening is odds and evens through it, but you don't know what you're tied to. So I'm trying to keep you guys aligned and with the correct information. Now, I've spent enough time on these 125s. I'm going to break it down into these 250 sequences. I've been doing it on Bitcoin. I'll do a video on Bitcoin on this same sequence stuff. But right now, because the last video was NQ, and I just, everybody likes NQ, I'm going to explain it a little better on this. So if we have a bunch of time, we can consolidate that time. The same way, if we have a bunch of stuff to count, we can consolidate that information. Like I said, we can count in groups of 1, 2, 3, 4, 5. So again, we can only count in odd numbers and even numbers, okay? So we can only count in 1s, 3s, 5s, etc., odd numbers, and 2, 4, 6, 8, forever, even numbers. So there are two mathematical dimensions that are running against each other. And so that's what we're playing on, the mathematical boundaries that these put in. So if we'll just take a moment to think about that and think about how it has to start from the same point, and how if we use different size ones, they're going to be executing before the other. And so we can learn how we can interpret that information. And this is going to be a bit complicated in one sense for me to explain to you, because I've never tried to explain this to anybody. I just learned it myself, and I've just been doing it. So, and to be honest, I solidified this information like less than a year ago. So I'm not on here saying and doing something that I confirmed all this before I started coming and showing you guys, long before I started showing you guys this stuff. And it's actually true. And I did a whole bunch. I did thousands. I've got over 25,000 hours in this stuff, trying to get to understand it, to figure it out to a solid point of where I need to be. So, and what I need to be paying attention to. So we're counting in nested sequences. We're counting in different size mathematical equations. And right now, everything's going to be based off numbers of 5, okay? So we can do this off of any number, the number 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, to infinity. We can do it the same way and count that way, but there's a very specific reason I'm doing this, and there's a very specific way that I'm doing it, and it ties it back to an origin point, and everything ties in nested sequences, and we'll have mathematical confluences and stuff teaching us stuff. And so we'll also be able to run other sequences against these 5-bar sequences. All right, and so let me go ahead and explain that. So we have Fibonacci numbers 3, 5, 8, 13, 21, etc., right? So we know that that's counting in a 1 sequence. If we are counting in a 2 sequence, the number 3 from the 1 sequence would be switched to a 6, right? So the numbers would be 6, 10, 16, 26, 42. If we're counting in 3s, it's going to be 9, 15, 24, 39, 63. If we're counting in 4s, it's going to be 12, 20, 32, 52, 84. And if we're counting that same sequence in 5s, we have a 15, 25, 40, 65, and 105. Okay? So all it is Fibonacci numbers. And then if like I said, if you're doing an inventory system inside of, I don't care, whatever, any inventory system, you're counting something, and you could go to this shelf and it'll be things in just groups of 1. You go to the next shelf, whatever's in the boxes are in groups of 2, and so you don't count them as 2. It counted as 1 box of 2, or so it'd be 1 box of 1, 1 box of 2, 1 box of 3, 1 box of 4, 1 box of 5. You get the general idea I'm trying to get you to understand there? I hope so. If not, just take you a little while to think about that and it'll start to make some sense to you. So anyway, we're on a 125 bar sequence. What we're going to do is we're going to go ahead and switch over to a 250 bar sequence with this same exact starting point, the start of the year on the 4-hour time frame, the very first candle it gives you. Again, we cannot run this sequence into the future. On Bitcoin, from starting points we can, but this will be, kind of adjusting out as the hour of each day is taken out, and then so it'll shorten the time span. So it'll throw off whatever you put out here. So you have to be aware of that whenever you're coming into the chart, knowing you lay it out and you're looking back, trading back off levels anyway. We don't need to know what's ahead of us in that sense, other than knowing that something could come in, and we know when it could come in at the next bar when it opens, right? So if we're keeping up with it in math sequences, we can understand exactly what it is. So, but anyway, I'm going to go ahead and, all right. So we'll look at this real quick. Current section, this is the 1, 2, 3, 4. 1, 2, 3. We're in 4. Like kind numbers means it will look towards these highs of 2, the low of 2, open and close of the 2 in this bar. All right. And so this is all split up like in 5s, and you read this the same way you would the week. Monday, Tuesday, Wednesday, Thursday, into Friday. So it's 1, 2, 3, 4, 5. That's what Monday through Friday is. 1, 2, 3, 4, 5. It is never Monday, Tuesday, Wednesday, Thursday. You just look at it as 1, 2, 3, 4, 5, so you can get it in your head, and you'll just, that's it. Reprogram yourself. These numbers are 1, 2, 3, 4, 5, right? That's it. All right. And that's in perspective to these large bars. And inside of here, this is 1, 2, 3, 4, 5. And if we count the little candles, 1, 2, 3, 4, 5, okay? 1, 2, 3, 4, 5. Just keep repeating. And so it's fractal. It's a nested sequence in and of itself like this. But we're going to go ahead and show that on NQ, our current trade, just to show that really quick to entertain you guys to understand what's going on here. We are in this large candle form. We are bar 1. So this would be like a Monday. This section would be like Tuesday. This will be Wednesday. This is bar 1, bar 3, off bar 1, back to bar 1 levels. That is why the hesitation is going on. That is why it dropped from that 3, came back inside of this, off of the little structure of itself here. Went back up and hit 1, 3 to 1, like kind numbers, odds or evens. So it came off 3 off this, but also combined a previous bar low. But if you take a moment to look in this right here, this is bar 2, and this is bar 2. And if we look closely, bar 2 was not hit, right? So I tell you, if we look back in a previous week, right? If I tell you look back in a previous week, like I have in other videos, we'll look back for in this week, we'll be in bar 2. And if we go over here into the previous week levels, then we look for the odds or evens type, because we're in an even bar, we would look for the even bar. So we're looking for odds and even type sequences in the previous section. And so that's why it did that. Okay, so bar one, or bar two has in this smaller one here, let me mark off bar one really quick. Bar two has expanded bar one. This is a bold, like a black line. These are light gray lines in here. So again, we are bar three here, boom. 3 off 1, boom, right? The closing levels in there, it didn't, just danced around it, stuff like that. So we're going to get into the next sequence. I'm just showing you this right now on this sequence. And so we have gone, and in the larger bar, 3 off 1 and 3 hit 1. In this smaller bar, we are 3 off of 1, and then we've gone up through 1 in the larger bar and went and hit to the high. But in this smaller form, we went through the smaller one, hit the larger, and dumped back down, and are sitting on top of the levels from the lower time frame, bar 1. This is mathematical trading. So if we're looking for trades, what we'll want to do in this perspective before I switch to the next is to understand that in this perspective of from this low in these bars, our target would be this, not any higher. We're trading in this like it was a weekly bar, and this would be a previous week. So this would be trading back to previous day high. You understand? That's what's going on. But bar 3 comes in, it closes, it doesn't go back up and touch it. Bar 3 comes in and hits it, 3 and 1, boom, boom, boom. We've got the volatility coming in. And so that's what's running us through this. And so now we are bar 4 seeking bar 2 levels. Can it go up here? Yes, that's the mathematical higher time frame in this perspective saying that's where it is. But if we were looking in this smaller bar, just to be clear, and we were looking for you were looking to scalp something, bang, and be out. And you want to know why you're getting out. You're getting out because you targeted one of these little levels, because you traded on these little bars and only wanted to trade that type of information, small trade, get in, get your money, get out. But what if you're trading this bar against this bar? Well, as soon as it goes up and hits that high right there, then in that perspective, your trade would be over, right? But if you're looking for a previous day high level to get out at, boom. So you'd be like 2 off of 2, boom. And you would take it at this. Or because you know this higher mathematical level here, you could say that was your target. This bar, you're doing this thing right here. So we have 3 different trade perspectives. So when you say, show me your stuff, show me how you did it, you're not going to understand. If I literally showed you in front of you, you'd think you just start ignoring me and just, watch me press the button. And so I'm trying to get you to see how to know what type of trade it is, and why it has these fluctuations when it hits something and it executes and then does these little reversals and it gets a little crazy at times. You know what I mean? If you look at this big candle set up around this big level. Look at these candles right here around this big level. Out in here, smaller maths. You get down here out of these are the bigger levels per these maths. And so once you hit that, it activates and gives you bigger candles, and you come over and you have smaller candles. You're running the smaller sequences of math. And here's your bigger candles for the smaller sequence. And so, you come back over and you're activating something big. Boom, big candle. Well, if we keep going, it's because we've activated a large candle. We have consolidated all our information. We know where we are. We know what we are. We know exactly what we're looking at. We know why we're looking at it. We have a mathematical reading kit that is universal to every way you can count. Odds and evens, 2 bars back. That's it. I'm telling you, it is a fractal. That whole thing is an entire mathematical equation is what I'm trying to tell you. You're not really understanding that because it's new to you, and you're used to seeing all this other crazy stuff in the markets, but that's what's running this. I've showed you on, I didn't do the display on here, but I did it on X, and I just recorded the posts and stuff, and then I deleted it off there, but I still have it. I might post it on here. So again, we are 3. We are at 1. All right, that's odds. We are 3 at 1. That is fractal. 3 and 1 at a 3 and 1. You understand? Right? 2 at the previous bar, 2. That's odds and evens. So the odds and evens led to the 2-bar back strategy in this perspective. I'm trying to teach you a mathematical flow. So if we know that we get a 2-bar, if we get a like kind number trade like this down here, then we can know the other side of it is the V. This is a V. This is a mathematical V. We've hit a boundary, we've hit and expanded the boundary and come back inside, bam, right? Anyway, enough on that right there. That's the entire trade in on the 4-hour bar with this strategy down to the 15-minute time frame, showing you the fractal 3 and 1. Inside the 3 at 1, 3 executes at 1 to 1, and then 3 also executes off of 1 to 1, blows through. The larger candle pushes it higher. 3 to 1, 3 to 1, 1 to 1, 1 back to 1. It's all like kind numbers. I'm trying to teach you, but don't click off the video. I'm going to start showing you this other stuff. I know it's going to be a long video, but you guys just got to bear with me if you want to really know what's going on. If you want to know how I would view the markets, I'm about to show you, but I'm about to scramble them brains for you though. You watch this. Here we go. Coming up, the 250 sequence. Let's get this back on 4-hour. Give you one last look at it real quick before I switch over. All right, remember, this line, since it started at the beginning of the year and it's going to run for 25 years, this line is equivalent to the half point of a day. If your day opened up today and your 12-hour candle closed, your new 12-hour bar, this is that point. 12-hour close, 12-hour this. That's what it's equivalent to, because we're going to double up and consolidate this information. And this is how we do it. Bam! We got the 250 sequence here. Okay. Now, what does that mean? So from pink line here to the next peak line, when it lays out, it's going to be 250 4-hour bars. And what does that mean? It's sectioning everything into 50 bar sections then. So 250 divided by 5. Sorry, let's just go ahead and start over there. 125 divided by 5 gives me 5 sections of 25. 5 sections of 25 divided by 5 gives me 5 sections of 5. That's all fractal. And my 5 is divided into 5 parts of 1. So I've got a base bar of 1. Now I have a base bar of 2 because I'm doing a sequence of 250. So this and this are equivalent to 1, just like I said in the previous video. So we would look through and mark this out and count our bars out. I'm not going to do that on the whole chart, but it would be 1, 2. Mark the next one. We'll do it like this just to go ahead and show you and give you an example so that if you want to do it and go chase it and pay it and, you know, just test and see if I'm telling you the truth, you just have a happy, good old lucky time with yourself going and doing that. And there it is. That's how you do it. It is 2, 4, 6, 8, 10. You understand? And it is in a bar of 1, 2, 3, 4, 5. You're counting in groups of 2. All right? So the next sequence I'm going to show you will start in a group of 3. And yes, it's going to end with 375. 125 times 3 is 375. Okay? That right there is a 3-part nested fractal sequence. Okay? I'm going to break that down for you. But anyway, you can see how this worked. You can catch any point. You can come over here. And for this high right here, really quick, just to go ahead and show it. 1, 2. Mark that one. All right. So 1, 2. Mark that one. And then go 1, 2. Mark that one. And then 1, 2. Mark that one. And now you've got 5. And what do we have up there? 1 rejected at 3. Well, I will be. Can you believe that? 1 rejected 3. Huh. That's amazing, isn't it? Pretty cool. And so what do we have over here? 3. Or sorry, this bar here looking 2 bars back. So this bar, 1 bar, 2 bars back. What did we do? We hit this level. So 2 bars back, open level, came over and gave us a trade there. And when we know these sequences right here, we can open up, we can count them in Fibonacci numbers of 3, 4. So 1, 2, 3, 4. 3-4 calls the trade at the previous untouched level, 2 bars back, open level, 2 off of this right here, which will be 7 off of 5 in like kind numbers if you followed along with that. I'm just trying to breeze on through this real quick and just kind of get the point real quick. So if I take these off so it doesn't throw off your view real fast, you'll be able to kind of follow through it a little better. All right, so now we are in large bar form. Well, sorry, we'll just start in the smallest bar form here, just down at the bottom, just to start. So we got 1, 2, do that. 1, 2, 1, 2, 1, 2. All right, we're going to come over here and 1, 2, and we're in the new open. So this is bar 1, bar 2, bar 3, bar 4, and then we have bar 1. So it went 2 bars back low off of that, which is also 1 through 3. 1 off of 3 if you want to look at like kind numbers like that. But if you go 1, 2, 3, 4, 5, 6, this is 6 off of 4, 2 bars back. Boom. All right, and so if we take a moment to look at this trade right here in our current form, just because we ended that other video there, we'll go ahead and just start here just to make sense of this for you. We have consolidated all of our information again. I just want to, so what does that mean? It means we have less to read. We have less main target levels. We can understand a bigger picture by doing so. Okay, so if we know that this right here is the 5 sequence, and this is my main bar open, and this would be bar 1, so we know that bar 2 can expand it. Okay, and bar 2 expanded it. All right, so the main bar 2 here, which will be 5 of these bars. So there would be 5 sets like this to make up this section up here. So, all right. If we just kind of take a moment to look at that, 2 bars back just to show it's clean off, you know, just the same thesis. Now, if we take and look at this current main bar here, all right, what do we have? We have a main bar open. So if we look 2 bars back in this bar form, which would mean we look 1, 2 bars back for open, high, low, close levels. What do we have here? Now we've got consolidated information telling us 2 bars back in large bar form and 2 bars back down here for the long in a smaller bar form. So in that perspective, we can then go up and say, we'll have to go up in a higher time frame so it shows a little easier. We are bar 4 looking for bar 2 levels. Open, high, low, and the close. Okay, so that's what our target is right now. This is Monday's opening range if this were a week. Monday, Tuesday expanded, came back inside. Wednesday broke the other side, came back inside, up under its own levels, dumped back through the low of the week. Woo! Yeah, that's how they do it. And so that's how they explain it. So it's bar 1, bar 2, bar 3, bar 4, bar 5. One more time. 1, 2, 3, 4, 5. So I said bar 4. Sorry, that's bar bar 5. Looking for bar 3 levels, not bar 4. Yeah, you'll catch me misreading stuff like that sometimes because I'm jumping back across fractals, and I'm also looking up at a set of like, well, I've got 9 screens over here looking at stuff, and then just, you know, to use it to explain to you what's going on. So you can see how 5 is inside of 3. 5 is now looking for the opening high, low, closes levels of 3 there. Sorry. All right. In this current bar, in our previous main bar, which, yes, in this aspect of this bar, we're looking towards this bar's levels. Okay. The open, the low, the high, and the close. So our current bar is still inside of that previous mathematical bar. Okay. And in the form of this current bar, 2 bars back, 2 bars back, up. Now we are back up here, and bar 2 of these expanded and has hit both sides of bar 1. Same way Monday can hit both sides of the week. It's not a big deal. Down here, we are bar 5. Just a minute ago I told you, if you think about the odds and evens strategy and the 2 bars back strategy, you have to think about and understand that if odds and evens are connected in an aspect, right? Sometimes they're connected, and 2 bars back seems like it's disconnected. It's like, think about like a V, right? The numbers can be connected, and then the other side is not connected, but it's still mathematically tied together. So that's what's kind of happening here. You have the section come in, and in this section of time, it goes up, bar 1, set a high, 2 poke through, bar 3, off bar 1, dump back down. What do we have? 5 hits 1. This is like-kind numbers, and this is also like-kind numbers. It's not 2 bars back. This one is 2 bars back and odds and evens, and sometimes they go up and they come back and do it and this did it over 5. Sometimes they do it in bars of 3. So it would go up 1, 2, 3, the same way over here in the other perspectives where 3 hit 1 and went back and forth. So 3 would have hit 1 and went back towards the low of 1, right? So anyway, that's pretty much this perspective. And so what we like to see is at a trade, when we know we have like-kind numbers, we like to see the other trade come through as well. A previous low broken. That would be nice to know that this right here is a mathematical previous low. And over here, we would have 1 coming down, 2 and 3 coming back inside of 1 and coming back up. All right. And so, again, we're over here, and this is what's going on with all of the, that's what's going on with, the current situation right there. We are in this form using it as a structure. The structure from the previous day calls that. But in the other scenario, I showed how that worked out perfectly. So how you can understand that's going to give you an example of how on one it can give you a couple signals, and on another it may give you a clean signal like the previous bar, but on something else it may be 2 bars back. That's telling you that it's mathematically aligned with 2 things. We have a previous broken, and in a mathematical 3-part fractal could be active, right? And so I'm just going to show you how this looked on the 15-minute time frame over here. The closing level was up in here. I don't have it marked, but you can see how it fell up over here and dropped back down, okay? And so that's pretty much how it goes. Over here at our higher time frame level, we've got 3 sections here, 3 of these, and this one rejected the structures of the first, the lower lows, and then these little structures here, failed those. And then it's also down here in this same one, 3 is looking for the other lows of 1 to reject down there, and it continues on down. So we can see how in some perspectives we can know how if this is 2 bars back in these bars here, we know in some maths we can just use our intuition, and we can know that right there is like a Wyckoff trade, right? And so that's how we know that is mathematically tied to it. So we know in this form that this trade is not going to happen until this bar, right? And if this looks to be what is about a center peak of this, that'd be roughly a 3 on a 5 bar. And if it's over here, that'd be a 3 on a 5 bar. So that would be 3 off of 3 structures from 2 bars back. So if this was split by 5 and this was split by 5, then this right here would be 3 off of the 3 structures of 2 bars back, while it's a larger 2 bars back structure as well. So that's pretty much how that goes. And so you'll start to see these type of trades like that. And so if we're here and we're looking for a short, and I'll show you in another perspective from over here really quick. Let me just get this level drawn out here. Well, that's not what I was trying to do. Trying to drop one of these here. All right, let's go ahead and get it aligned at the open. Get it scroll back down. This is a bar we're going to go forward to, because if the strategy is to look 2 bars back, woo, look at that. Oh, man. Can you get much cleaner than that? I don't think so. So in this form, 1 bar, 2 bars back, we use the open. Boom, dumped, came down, and then we're in our current bar, main bar. We are a third part of the going at the first part. And so what does it do? It actually, this level was front ran, but it waited to hit it in the third one, right? It doesn't really matter. It front ran it, but it still caused that level. That's what it was reacting to and why it did it. Now, I've shown you a bit of this on, and it's been working out perfectly on a 125 sequence. And now, do you see that I'm literally doing the same thing? And did I change the way that you read this? No, I did not. I read it the same way. Odds and evens, 2 bars back. Why? Because that's how it is. That's what counting is. We are accounting for something. And so, therefore, we know what we have. If we do not account for it, we do not have a clue what we have. So, for anybody that's still with me at this point, I commend you. Most people's brains are probably going to be fried right now, and they don't know what to even think about this. But hey, they asked for it. They want to know. I'm going to help them out. You want to know? You got some studying to do. I have a lot more complex understanding of this than what I'm showing you. I'm just, I'm going over this stuff and getting you to understand it in the perspective. Now, again, just to touch base before we switch, the first sequence was a 125 from the start of 2026 to run for 25 years. This second is a 250. So the 125 is 125 split by 5 bars of 25 weeks, right? So this is 50 weeks because we've doubled the time, right? Okay, and so we're building out a fractal nested sequence, and then we're going to get into another set of numbers that'll go with this. I may have to put this into another video. I'm not really sure, but hey, if you guys want it, I got it. I'm gonna show you what's really going on. Oh, I've seen a YouTuber say that they have the absolute best stuff. You'll find it nowhere else. Okay. Challenge accepted. I'm about to mop the floor with everybody. You just watch what's going to happen. So anyway, 250 hour bars perspective, 5 sections of 50. That gives me 5 sections of 10. Those 10 bars are split by 5 sections of 2. That is my base number. We are counting. We are counting in ones. We are counting in twos. And now we're about to be counting in threes on the next sequence. So the next sequence coming up. All right, here we are on the 375 sequence. I'm sorry, it's been sounding like I've been talking into like a barrel. I mean, it may still sound like a little bit, but I thought the mic piece was pushed in all the way it wasn't. So, so might be talking all crazy, sounding all crazy. So my apologies, but I'm not going to go back and redo all the video anyway. So this is what we're doing now. The sequence starts at the same place. And now I have to fix this again. All right, and so starts at the same place. The start of the year, this will also run with the other ones again for 25 years. They will be perfect for the next 25 years. So these sections here are 75. The first one was 25. The second was 50. The third is 75. Why? Because we are running nested sequences. We are consolidating information in an inventory system. We are not looking at Kendalls. We are looking at a gross inventory system, okay? And it's all ran by the same numerical system. It's the only way you can count, the only counting system we have. How can you count if you don't use numbers? How can you account for something and be able to know what it is long term if we abbreviate everything? Well, you just simply can't. I don't care what you say. You'll start getting lost. I worked at a place and we had a $500,000 inventory system. So, an inventory amount in the system that's fluctuating, like spending $400,000 or so, $500,000 a month or so or more. So it's just accounting. Again, odds and evens, 2 bars back, the same exact trading strategy, the same exact reading key. And whenever I break into these other sequences that are tied into these sequences, they are not going to be sequences of fives. They're going to be another sequence. And then whenever we tie them into that, we will be able to understand that there are going to be other sequences that are executing at points inside of these, and we will be able to find certain ones that will be executing. And if we're happy with those, then we'll be able to base a trade off of that and this in confluence. And guess what? They will be running. Yes, that is correct, from the exact same starting point, and they will also be running for the next 25 years. And I'm going to show you how to do this on many different forms. So again, bar 1 can be expanded by bar 2. Okay? All right, it can come back inside of it. And then bar 3 can react to bar 1. So 2 up here, put in a high, 4 rejected 2. This right here is an evens trade. Like kind numbers, odds, or evens. Evens. Boom. Comes down, and then 5 hits 1. That's the of this small bar. This is my opening range low. This is my bar 1. Again, this would be equivalent to the Monday open. And if we're talking about sequences in threes, then the first bar of 3 is your open range, high and low. This is just an opening bar range. Okay. So if you look over here, 3 is playing off of 1, 3 goes up, hits 2, it puts in 3 pushes. People may call this three relatively equal highs or whatever they're saying, but or 3 equal highs, whatever. So it's 2 bars back. That's what this is. Not this. This is the level. This is what caused it. 4 hit 2, boom, and then 5 hit 1. Right there is the connected top side and the connected bottom side trade over. If I was trading from my previous bar's low, my general thesis, like if you're trading through a previous day's low, your general thesis is to be trying to trade towards the previous day's high or the previous day's open or the close. Some kind of level that you can execute and know that you hit it because you think you know where you are, and you hit the trade, you take it, you hit the level, you take some profits off, or you take the whole thing, or you try to let it ride to a higher level. So you come in, this is the open level over here. I'll go ahead. I don't have that on here. I forgot to put that on here. But that's my open. Let me get it adjusted here real quick. And then I'll show you what it is I'm talking about here. 3, bar 3 on NQ. Now, I have not messed up. I've not made a single mistake other than calling those bars wrong in the other video, the other little clip. But yeah, so in this sequence, it's the same exact stuff, right? So I'm showing you like kind numbers, odds, and evens, and I'm showing you the exact same trading strategy, the exact same reading key through every bit of this. I have not changed it. I'm giving you a sequence. I'm giving you reading keys. It is mapping out perfect. Other people give you abbreviations. They give you random things that they don't even know what it's attached to, and then say, "Yeah, that's what that is," and they abbreviated that too. You've seen them mess up. You've watched them. What you've lost trades because of all of it. Everybody's been trying it and lost trades because of all of it. You know, everybody that's trying these days, and then talk about any SMT stuff or whatever. I don't even know what all that stuff is. I've never even put any time into it. But I can tell you right now, what the time I did, like just because other people said it, and I'm like, what are they talking about? And I go look at it, and it's to me, it's just it is. I mean, you can't make sense of it. I can't make sense of it. I'm a logical person. I like to make some very clear sense of things, and you can't sell me that one. You know, you know what I mean. You ain't getting me to follow that stuff. I don't like it. It ain't for me. I like to know clear, clean information. This is what it is. If you ask me, I've not seen anybody do anything better. So again, the open, low, high, new bar. So it closed. Boom. So previous low, broke, boom, over the previous stuff, over previous open, boom, through the high, dumps, comes in right here, back. On the other video, you know, you can look over here and see 2 bars back and see that it hit a level 2 bars back. This one is just simply a high of itself trade, right? And then I'll walk you through this. So this trade, this section closed red. Some sections, like if you look at days closed red, they'll put in an end of day consolidation before it closes. The end of day consolidation levels, it has a gap, it has a high right here, and it has another candle high right here. So whether you mark the gap or you mark those candles, you can see it came into that range, right, to the lower section of the previous math. If this was Wednesday and it reversed and came down, and Thursday came below it, came back up, and hit the lower consolidation levels that you could bring over, that's what caused that trade. It is also what it's hitting at, you know, 2 bars back, closing range or opening range area right in there. So it just didn't hit it because of the smaller trades right in here. And on the smaller time frame, if you're looking right here, well, since this right here is set up in, oh yeah, this is threes as a base bar. I forgot to throw that in there yet. So we got 1, 2, 3, and we mark the fourth one. Okay, so then we have 1, 2, 3, and we mark the fourth one, and then we have 1, 2, 3, mark 4, and then we do it again. Boom, right? And so, um, 3 right here. The third bar in the previous one was the level that the third bar in this. See, this is bar would be like this is 1, 2, 3, 4, and 5. 5 is going to reject one's levels. It's outside of it at a previous bar high, and the mathematical alignment is the third bar hitting and rejecting at the third bar. And also, if you look up top to follow the same thesis, a lower time frame, 2 bars back, right? A closing level of 2 bars back. Boom, boom. It opened, it closed, 2 bars back. Larger bar, rejecting 5 and 1, shooting back down. This is bar 3. Down here, this is 3. 5 tried to come towards 3. It couldn't do it, right? Doesn't matter. So anyway, that's how you would do it. It's your base bar of 3. So the 125 has a base bar of 1. The um, the 250 has a base bar of 2. The 375 has a base bar of 3. Okay, and so now we are over here in our current level, and let's go see what it said for our trade. We'll go ahead and work our way through this whole bar. This is going to, these sections are 15 bars apart, just so that you know. It is 375, 75, 15, 3. Okay. 3 can be divided by 1. Yes, but the 125 already covers that in the base bar form in 1, 2, 3s if you go look at it. So you don't really have that information. Excuse me. All right. So here we have our opening section, right? Bar 1, bar 2, expanded bar 1, and went to back across the range there. I'll go down to 15-minute time frame. It's just easier to do it right here for right now. So we have the high of our day. If we looked at that like a Tuesday instead of a bar 2, and we looked at it like a Tuesday, that is a first part of the day, high of the day, and in the middle of the day come in the second part. Boom. Like if you know, midday came in, new 12-hour bar of the day. Boom. All right. So we got 1, 2, 3, mark 4. All right. Let's just follow that pattern on across real quick. Okay. So let's see what we have. We have bar 1 in the previous and bar 3. That's like kind of numbers in that perspective. We came down here, we're bar 4 hitting the level up here. No big deal. Here's our open. There's our 2 bars back. First, the high of our 2 bars back. That's our open range bar. In the smaller mass, that's what caused that. If we took and pulled a range over from the bar 2 to the bar low to the high and came over and we do it, we can see how it'd be trading through that, which I don't really like to do that too much. So that right there is how that trade came about in bar 3 form. The other bars showed that a little clearer. And so you could see how we could have looked between those two and understood that better. Where the 1 and 2 may be clear, sometimes the 375 may not be super clear, but still give you the same understanding. And then the next time it might be that the 250 and the 125 line up and give you a better the 125 and the 375 instead of the 250 that line up and give you an understanding of a trade. Okay, so we have down here bar 3, 1, 2, 3, 4. We are in 5. Okay, so if 1 has an open range, high, low, close, we can understand how 3 can react to that. So, all right, we are bar 2, bar 4 shot us down. If you see that, this will be bar 4, rejecting bar 2, shooting us down. All right. So now we're in our current bar. This is bar 5. This is the lower structural levels, the structural levels inside of bar 3. 5 and 3, like kind numbers. 5 hit the lower structural levels of the 3. And it went through the previous low, it combined the trade. Like I was saying in the other things, you do a combined trade. There's a better trade level for you. It's a mathematical confluence. We have traded through the previous low to a 2-bar back. Boom. It goes from previous. You would think some by basic thoughts of what the basic understanding that's given out there to the world of through the previous low to the previous high trade over. Well, that would be like previous low to previous high trade over. So that's what is going on there. And so that's what's happening there. So I think I'm going to go ahead and I'll cut this video short for now. And I'm going to, in the next video, I will tie in the sequences, the other sequences. And so each one has another adjacent sequence that you tie in to it. You read it with the same exact reading key and you understand it that you can count from any of these points and count in Fibonacci numbers and find a trade, right? And so like at this open here, we can go 1, 2, 3. So that's Fibonacci the 3. And then 4, 5, there's Fibonacci. And at the 5, we can look and see 2 bars back. Boom. So there's 5. That'd be 6, 7, 8, 8, 8, and 9. So that's Fibonacci. So there's a trade signal. 8 faked out, 9 reversed. And then 9, 10, 11. If you look and pay attention, 8, and this would be, sorry, let's start over. 1, 2, 3, 4, 5, 6, 7, 8. So we got 8 running up to 6 and hesitating. And then we got 9 running through 7 and then coming back, either dumping up through a previous, dumping down through that right there, comes over and closes. This one goes back up and towards this range. It hesitates at the closing level. It comes over and this bar right here goes up 2 bars back and dumps down. It's mathematical understanding of where a trade can happen through Fibonacci numbers. We could have counted that right there. And since we're in a 3 sequence, we can say 1. That's in counting in ones, what I just showed you. So if that's 8 to 9, then that's going to be 3 to 4 for 3s, right? 1, 2, 3. So that's 1. 1, 2, 3. That's 2. 1, 2, 3. That's 3. And then 1, 2, 3. And that's 4. So we can see that 4, when 2 came up in here, we got 1, 2, 3. 2 opens up right there. All right. We'll mark it out. Get that brain scrambled for you a little bit more. Whoops, let me get the right tool. And then we'll move along with it. All right. So 4 is under 2. 4. Boom. Right? So 1, 2, 3, 4. 4 under 2. Where does it push to? Well, let's go see what bars we got. We got bar 2 pushed up into the bar 2 area over here of bar 2. Bar 4 pushed into bar 2. Second bar of 4 pushed into second bar of 2. All right. Same things. You can do every bit of it everywhere. So right now, we are 1, 2, 3. the next candle will be your open. That's going to be your bar 1 of these. And there'll be 15. And then these are 5 times 15 is 75. So these are 75 blocks, right? 75 4-hour little time blocks there. And so that's it. Each bar, opening range high, opening range low, bar 3 that we are currently in. I'm going to take that off so it's clear real quick. Bar 3 is rejecting bar 1 area. Now, if you show me somebody else that showed you this understanding of this entire market from the start of the whole year to this point, this clear, I think I'll pass out, honestly. I don't think you can find it. And this is nothing. I'm still just getting started. So if you want some more, you go ahead and just hang in there. My next sequence is really going to tie into this, and I'm going to start showing you how to read sequences within sequences. And so these sequences right here are all run off the number 5. The number 5 is Fibonacci. You understand? And so there's more than this to this, but this is the base understanding of 1, 2, 3 bars of 5. It is fractal. 5-minute, 10-minute, 15-minute. Does that ring a bell? You understand? 5-minute. There's 3 of them in the 15-minute bar. It's a fractal. It's a 5-minute bar. We're looking at 3 of them. That gives you 15 minutes. 15. 15 is a base bar of 75, ain't it? Woo! Come on now. Come on now. Y'all show me better. I'm still waiting. It's that person that's I seen a video somebody put out. They're a pretty good trader. They're a good trader. I'm not knocking them on out there, but you say you got the best. Well, now we're gonna have a little battle here. We're having some fun. So I'm only getting started, guys. If you want to know what I'm doing and how I'm doing it, you're gonna have to like step up your game and pay attention. That's what's going on. The market is fractal. I'm going to teach you how to trade in fractal sequences. I'm going to teach you how to blend and read fractal sequences in different ways to get mathematical confluences, just like I have shown you through every bit of this and all the different forms. I'm going to show you another sequence that you will lay out on another chart, and you can just kind of flip back and forth and see which ones are what, and you draw the levels off and you start counting. It may be that they start inside of here. Wouldn't that be cool to understand all these little mathematical confluences, and to have an internal confluence right here, a main bar like this, something like that, pop in the middle of it, boom, right in there, and tell you, ooh, this is a big level. So we've come from big level and we opened a big level. I'll show you how to do it. Y'all want to know? Well, time to pump up your BBs and get to learning. Pay attention, chart this out, start studying. I'll get to my trades. I'll show you trades. I'll show you the money side. But first, I got to get you to understand just what in the hell I'm talking about. So if I can't get you to understand what I'm talking about, you'll never understand my trade. You'll never understand the trigger behind it. You'll never understand anything. What you will understand when I'm done with you is how to get it together yourself and not need me to show you. You'll be able to read this on your own, bang out your own trades, and pay attention to your own money. Worry about your own self. Count it in the same sequence. Odds and evens, 2 bars back. Which perspective? All of them.